This week will be a massive week for Bitcoin. The Supreme Court's ruling on Trump's tariffs have been delayed to Wednesday. The unemployment rate came in lower than expected, but we will now be getting some inflation data. In today's video, we'll be talking about all of this, going over the most recent Bitcoin price action, and assessing whether or not we can finally break out of this range, or if it's time to grab that downside liquidity. If you enjoy the content, make sure to smash that like button and subscribe. Without further ado, let's jump right into the video. All right, so with the unemployment rate coming in lower than expected at 4.4%, the rate cut odds have decreased even more. There's now a 95% chance that there are no rate cuts in January. Now, this isn't that much of a surprise because this was previously marked at around an 87% chance, but it's almost certain now that we do not get rate cuts. What does this mean for crypto? Because right now, Bitcoin is essentially hovering right above $90,000. Yesterday, we got a pretty nice move to the upside on the lower time frames, of course, which brought us up to around $92,000. Now, you'll remember in my previous videos, 92K was a pivotal zone to grab because we had a lot of aggressive shorters entering right around that level. If you've been watching me, you know that I've been shorting Bitcoin. My average price is right around $93,500. Now, I've already secured some profits on this trade. Right now, you can see that essentially it's currently sitting at around 90K in unrealized profits. I want to maintain this position because if we are to break down, this trade will absolutely print. That being said, I may take a little bit more off the table and I'll keep you updated if I do that. But at this point in time, you can see that Bitcoin is essentially just hovering right around 90K. Now, before we continue the video, if you want access to all of my own personal trades, remember you do have the first link in my description down below. That brings you to my free premium group on Telegram. You DM me the keyword premium after clicking on this link, and I'd be happy to onboard you into my free premium group. The only requirement is that you've signed up with one of my affiliate exchange links, and typically I would recommend Bluffin because you can get up to $9,400 in rewards and access to VIP1 for 30 days, which significantly reduces your trading fees, all while giving you access to my premium group where I share all of my own personal trade setups. So right now, holding on to this short, still holding on to my long from around 82K. Now we'll have to see if we can go ahead and grab that liquidity because as I've been discussing time and time again, the highest liquidity cluster for Bitcoin is still right below $87,000. Between 86K up to around 87K, we have the highest volume of liquidity to be grabbed. According to this Bitcoin exchange liquidation map, there is still 2 times more cumulative long liquidation leverage in the market compared to cumulative short liquidation leverage in the market. And if you didn't know, usually in ranging environments, price trends towards liquidity. And the reason why this is a ranging environment, well, take a look at the charts. Since November 15th, we've essentially been in the exact same range between 94K all the way down to, call it $84,000, with a couple of deviations to the downside, a couple of deviations to the upside. But ultimately, we are still in the exact same range. And until we can get a confirmed breakout, it makes sense to not be super aggressive with your trades. Now, at the top of the range, I discussed it made sense to short. The question is, does it still make sense to short from these levels? And to give you a pretty clear answer, I would not be entering any kind of aggressive shorts right here. Are the probabilities there for us to break down? Yes, and that's why I'm holding my existing short. But you can see that my average entry is quite a little bit higher than where we're currently at. And so if I get stopped out on this trade, I will not lose any capital because my stop loss is indeed at break even. Right now, you do run the risk to get wrecked if you start shorting from here. I have to make myself perfectly clear. Also, reminder, nothing that I discuss on the channel should be construed as financial advice. I am not a financial advisor. I'm just a guy on the internet sharing his own personal trade setups and of course his analysis on the crypto market. Please read the disclaimer in the description down below if you haven't already. So right now, Bitcoin is kind of forming this wedging structure, and if we are to break down here, there is tons of liquidity to be grabbed, but we are technically speaking still forming higher lows. So the more and more that we can consolidate here, if we can confirm above the yearly open once more, that would increase the probabilities of getting a more significant move to the upside. However, until we can actually hold above that 2025 yearly open with confidence, I would not be willing to say we're just going to explode from here, because you can see that every single time we've made it above, we've made it to the top of this range and we got rejected. So right now you can see that in terms of local liquidity, there are some shorts that have piled up once more right around $92,000. But a lot more people are trying to go long here with tons of liquidity right below 90K. And if we zoom out a little bit more, say the 2-week time frame, it paints a pretty clear picture. On the liquidity threshold at 0.5, we have a lot more longs in the market. So I would not rule a flush out of here, especially considering the fact that we know that USDT dominance is looking a little bit more bullish. We tapped into that initial resistance, and if you didn't know, of course, this is inversely correlated with crypto asset prices. When USDT dominance pumps, Bitcoin and the rest of the crypto market dumps. And when we got this wick over here, that actually coincided with the 80K bottom. So that's why I have my arrows like this. If USDT dominance is to break out from here, that would be very, very bearish for crypto. However, if we just got rejected at the top of the range, which some would argue, and we come back down here, this is ultimately bullish for crypto. But right now you can see that we were trying to break down on the 1-week time frame, but we ended up printing a green candle here for USDT dominance, which is something you need to consider, because perhaps we have another opportunity to run these lows. And a successful breakout from here is bearish. Now, taking a look at the spot ETFs, you can see that yesterday we got around 400 million worth of outflows. Ever since we had those significant inflow days at around 500 million, at around 700 million, we've essentially erased those gains with some outflows at the end of last week. All while the Coinbase premium is still trending quite negative. We had those little peaks which suggest strong buying power leading up to it, but if we can't get that sustained green momentum for the Coinbase premium, then naturally we end up rolling over. Now, I don't want to make this a super bearish video, but I just play the probabilities. And right now, Bitcoin is continuing to form higher lows here, but we're still below the yearly open. And I would actually be willing to pivot my stance if we can reclaim the yearly open as support, to make it perfectly clear. So at this point in time, I'd like to see what Bitcoin can give us over the course of this week for me to consider entering a new long in this market, because yes, I'm still holding on to that long from below $83,000. I would want to see a nice liquidity grab for Bitcoin. Now, what would that entail? Ideally, we can chop up and grab all of this liquidity to the downside, and right when everyone is extremely bearish and we manage to hopefully grab this downside liquidity, if we start to get choppy price action here, this is actually the area where I would go long and target the top of this range. And perhaps this would be the bigger relief rally that I've been discussing on the channel for quite some time. And that relief rally, if you didn't know, would coincide almost perfectly with the bull market support band. This is essentially where I'm aiming for a higher conviction short in this market, targeting lower levels. Now, if you're not a trader, I can understand that this may be a little bit complicated for you to understand, but I'm essentially just trading the local price action, trying to make as much money as possible trading. So when Bitcoin does inevitably drop lower, because that's still my base case, that we will be dropping below $80,000 this year, I will start to dollar cost average into Bitcoin in preparation for the next bull market cycle. So that's my strategy. Just trade the local price action and see what comes of it. But at this point in time, we need to make sure that we can reclaim the yearly open. Otherwise, we are likely to move lower. And if you've been following me, you know that that has been my base case, because I'm still maintaining my most recent Bitcoin short with my long as a hedge in this market. And just a reminder here, all of the trades that you're seeing on the YouTube channel have been shared in my free premium group, which is the first link in my description down below. Now, this week, we do have a pretty important week in terms of inflation. If inflation comes in hotter than expected, it could once again spook the markets, and that could be enough fuel to go ahead and send us lower. But if you've been following me, you know that the TA comes first. So right now, we need to reclaim this cluster above here before we can start talking about about the yearly open, which at the bare minimum is this 92K zone. This is the beauty of having shorted and holding on to that position with my stop loss at break even, because if we come up here and we get acceptance above that 92K zone, I will likely cut more of my Bitcoin short trade with more profits before letting it hit my stop loss at break even. Because if we do manage to get above here and get multiple 4-hour closes, there is a chance that we can come back and sweep the highs. It's all about probabilities, and I am just trading the market that is right in front of me. It was a no-brainer in my opinion to short right around the highs because we did hit that key resistance. And if you didn't know, yes, we are still in a downtrend. Whether you like it or not, the trend is still very much down, and over the past couple weeks, some would say that we did get at least a little bit of relief. So let's see, is the relief over this week? Only time will tell. Something else I just want to bring to your attention, the Supreme Court will be ruling on Trump's tariffs on Wednesday. Now let's see if this gets delayed. But what's interesting here is that President Trump came out and said he will use alternative tariff powers if the Supreme Court rules against him. And just a little refresher here, there's over a 70% chance that they do rule his tariffs illegal. So we'll have to see what happens here, but we should be getting a lot of volatility between this and the inflation rate coming out. All I can really say as a trader in this market is try not to get married to any position. Don't be max bullish, don't be max bearish. Adjust to the price action that we get. That's the best piece of advice I can give you. I'm seeing a lot of people start posting extremely bullish charts, but remember, if history is to repeat, this is supposedly a bearish year. Now, I am not personally a super cycle believer. Maybe you'll hate me for that, but the point is I'm just going to keep on trading the price action that's right in front of me. You can see here, still amazes me that crypto dudes can't see the big picture here. Bitcoin did the unthinkable, bottomed in April with stocks, and it's about to pull a higher low relative to the 74K bottom. They will say that we are in a super cycle, while truth is we are in a new bull for many months now. I personally disagree with this. And another post here, this is interesting. You really do have to be careful who you're listening to within this crypto industry. Whether it's myself or not, it doesn't really matter. But as I've always said, pick 3 to 5 creators at most that have, 1, provided you value in the space, and 2, are at least profitable trading the crypto markets, because when you listen to this kind of information, it can actually switch your bias. So block out all of the noise and only pick a few people that you want to listen to. This comes out directly from Cointelegraph. Alert, liquidation maps show heavy short leverage stacked above price with roughly 5 billion in potential Bitcoin liquidations near 100K and about 3 billion for ETH around 3.4K. Okay, yes, this is true. But if we go back to this map and we actually take a look at it, while there may be 5 billion above 100K, if Bitcoin is to drop back to those lows around 80K, there is 11 billion worth of cumulative long liquidation leverage. And if we take a look at Ethereum, it likely paints a similar picture. On the left here, if ETH is to fall down to around 2,740, there is 6.47 billion worth of cumulative long liquidation leverage. If ETH is to rise all the way up to 3,500, there is just over 3 billion worth of cumulative short liquidation leverage. So, while this information is true, the way that they present it would suggest that we're just going to immediately pump and liquidate those shorts, but it's very clear that there are way more longs in the market compared to shorts, as per all of the charts that I am showing you in my videos. This helps me tremendously in terms of trading, especially because we are still very much in a ranging environment. And remember what I said, when we are ranging around, liquidity definitely rules. Now, if we are in a severe downtrend, that's when things can change. You can see a lot of shorts pile in and the price can continue to drop. Same thing from the long side of things. If we are just absolutely skyrocketing, Bitcoin doesn't have to come back down and liquidate longs. But as we chop around, the market makers will likely go ahead and grab some of the liquidity on both sides before making its next big move. And I approach trading the market with that in mind. Liquidity rules in a ranging environment. So right now, holding on to my Bitcoin short, holding on to my Bitcoin long, and we'll have to see how the price action develops in this upcoming volatile week before we can make our next big decision in this market. Remember, if Bitcoin is to pump, we are still very much in a downtrend, and I would caution you on being far too bullish. I actually think that we can go as high as $100,000 for Bitcoin, but this would be an area where I would look to enter a new short in the market, anticipating a lower high on the macro scale before potentially moving lower into the bear market, so I can go ahead and accumulate more Bitcoin and more crypto assets near those bear market bottoms, which, if history is to repeat, is in 2026. And that sums up today's quick video. Remember, we also have that CME gap down below to $88,000, which I forgot to mention, but pay attention to the liquidity. If we can get a breakout to the upside here and we confirm above the top of the range and above the yearly open, it's likely that we will get a more significant pump towards that bull market support band. However, if Bitcoin can't, at the bare minimum, first and foremost, reclaim $92,000, it's more likely that we will be grabbing that downside liquidity below $87,000. If you enjoy the content, make sure to smash that like button and subscribe. As always, I have my bluff and leveraging tutorial right here, and I'll see you in the next video.